Okay, so you'll be glad to know this is the last of the 4 videos, and I'm just going to go through the spreadsheet so that people understand what it is that I've tried to do. Let's just make it a bit bigger. Okay. Basic format, just a few changes that I've made, really for some of them just for this strategy. The first column here is the numbers, that's the index numbers. So each trade for each particular strategy has its own index number, and that's located on the snags that are also on the site. You'll see those on the top left hand corner, so they can be cross-referenced. Plus, you know, if I do any notes or anything in a separate journal, they're also referenced with that number. Obviously I list the days just in case. Now, entry and exit time. One thing it doesn't tell you is it tells you when it was in. It doesn't tell you the exit time, whether or not it was the same day or the following day or when. So I have hours in trade here, and just to confirm whether it ran overnight or not. Overnight, yes or no. The vast majority actually do run during the day, and some of these yeses where it has gone overnight have been fairly late on in the day. So that's 9 o'clock at night there. 10 o'clock at night, 8 o'clock at night, and so on. That's 11 o'clock at night. So pretty obvious that they're more likely to go through the night. So it basically depends on, you know, when you're trading. If people are trading more in the mornings and afternoons, then the percentage of trades that are going to go through the night are going to be far less. Entry, exit price, all these columns along here are the same. This is my risk reward based on my target that I set. So the top one, that's 1.8 to 1. 1.5 to 1 is obviously 1.5 to 1. Taken or not? Well, they're all not taken because these are back tests. Short or long. Pivot levels. This is the pivot that we're actually bouncing off, whether it be DS3 or DR3. I haven't bothered to put the DS or the DR on because that's determined by whether it's a long trade or a short trade. Moving along. Points from the 50 moving average. This relates to the hourly chart, the setup chart. Excuse me, my voice is going. This is how many points at the point of entry into the trade were we away from the 50 moving average. And bearing in mind that it's a reversal trade and I'm taking the moving average, the 50 anyway, to be the center point. So it's how far we're away from that particular center point. They're all reversal trades, profit and loss, etc. Now, this is ATR. Now, this is a bit of a work in progress. These are the sort of the numbers that I came up with to put in here. I've also been looking at some other numbers the other night, which relates to how many points points at the point of entry the price had moved on the 4-hourly chart and the ATR on the 4-hourly chart and so on. But to be honest, it was getting late at night and I just started to see numbers, so I really need to go back and spend more time looking at these. Basically what they are is this here, it says the points moved for the day. So in other words, how many points has the price moved, its range effectively, up to the point where the trade enters, i.e. the pivot level. So on this particular day, we're 74 points from the 50 moving average on the 60 chart, and the price had already moved 75 points for that day. Just forget this column for a minute. Really, I was just working, if the price has moved 75 points in one direction, I wanted to just keep a record of how many of these trades or setups meant that I was trading against this direction. So if it had moved 75 points up, how many of the trades were short trades? And of course, as you can say, they're all against these moves. Coincidence? I think not. ATR for the day. It's fairly straightforward. This here is a percentage, the percentage of the ATR before the trade. So in other words, this is this column here. So the overall move for the day so far was 75 points. That is 58% of the daily ATR. This is the percentage 50 moving average of the ATR. Alright, so that's this column here. How many points are we away from the 50 moving average on the 60-minute chart before we go into the trade? And that as a percentage of the ATR is 57%. So far I haven't really been able to notice any particular link in these figures, but again I probably need to look at those. Probably actually more in relation to how far the points moved eventually rather than targets. So this possible profit, that might have some relation to it. So I need to look at that in more detail. These are my potential exit points. So I've got the trend line and 60 on the 60 and the 240. So I said that they're quite important. If they exist, or if they came into play, or even rather, even if they were there, even if they weren't between my entry and target, if I'd held on till hitting the trend lines, how many points would I have gained? This is my default target that I've been using to get these figures here, and that's the 21 moving average target on the 240 that I talked about. The 50 moving average on the 60 minute, fairly straightforward. Next stochastics hit, and next stochastic cross through. Right, I'm just going to pull up the chart. If I can find the flipping thing. Where is it? There it is. The next, so say for example, I said earlier that we hadn't had a trade since we haven't had a trade. I haven't anyway today. Incidentally, this is a setup, but it didn't qualify for me because once we closed above the price, above this 20% line, let's just we hit DS2, I didn't get a second hit. That's a lovely move as well, but I wasn't able to get into that trade. But here, so if my target, the next hit of the stochastics hit would be here. So it's gone back up and it's hit here. So if I had gone in here, this would be my entry point up here. Okay. The next stochastics cross through would be then when it then crossed back down below that line. Okay, so that's what that means. And then these are the fibs. I tend to set the fibs as being very conservative, so I'm looking for the previous high and low rather than necessarily the biggest or the most significant, perhaps on a longer term. So it depends where. They're all very subjective, aren't they? In terms of points, this is 931 points net. That's after the 2 losers. You notice that we've got only 2 losers out of 23 trades. That's a 90% win-loss ratio. I did do some work, but not to this set of criteria. But I did do some work for October, but that data isn't available to me anymore, so I can't go down and add those into the sheet. But there were some good setups in October. November slowed down a little bit, only 2 setups. Nothing in December at all, or the first 2 weeks in January. Certainly, I think the latter part of December and early January, I think that's to be expected. Then we had 4 trades in January, very good set. February, not such a good March, but still not too bad. 5 trades, that's probably an average, I would say. And then so far this month, very poor. So we're seeing a pattern, starting off very well, dropping, picking up, doing very well, starting to drop. So I think we're in this bit of a lull area here. But I think that over 5 months, considering that we're 6 weeks with no trades at all, that makes an average of about 180 points net. And this is from one strategy on one time frame. So the things I want to start working on are obviously other time frames. There's no reason why it can't, and you can actually, I mean, this is so easy to spot and so easy to monitor that you could trade multiple markets very, very easily without any difficulty. I haven't tested news announcements against any of these yet. Other things to check are things like the method of entry. So perhaps the stochastics cross being different, rather than using the crossing through the line, possibly the blue and the red line crossing. Start looking at the entry levels so that perhaps some of those missed trades aren't missed. So instead of going at the pivot level, looking at another form of entry, so I can get in a bit earlier, and maybe some new exit points. Definitely need to do some more work on things like the ATRs. I also think, having been through the setup, there's certainly a lot more setups there if you don't require a second hit of the pivot. But it's a reversal trade, and it's taken off a pivot, but it doesn't have to be a pivot. I've noticed that actually the stochastics and point of support and resistance come into play quite a lot. So I think there's a lot of other opportunities. It would maybe have to be classed as a different strategy, but within the same, this kind of similar format. Some of those points of resistance, obviously, highs and lows, trend lines, which we all already know to form a good exit point, could be a good entry point as well. Possibly moving averages on a higher time frame, 200 moving average, 100, 500, whatever. So there's quite a lot of work still to be done on this, and when you do all that and take extra points, I think there's certainly more points to be had than here, and then multiply that across a number of markets. I'm quite confident and quite positive about this, that I can make this better. So any help from anyone would be much appreciated. Thanks a lot.